Hello and welcome back. Over the last 24 hours, the crypto markets have been absolutely smashed, but that scenario played out almost to the letter as we described it might in the last couple of videos. I hope you were paying attention. I hope you were able to capitalize on that, and I hope you were buying the dip. Unfortunately, the escalating geopolitical situation means we might be in for yet more downside. But let me start the video by running clips from the last couple of videos explaining how we saw that situation unfolding. There's now asks in the book above us, sell side liquidity below that key 65K level. And there's just a lot less market participants advertising a willingness to buy at prices immediately below us. The net effect of this is us moving one step closer to a potential setup where prices move down from here, eventually liquidate some longs here, breaking through key support, and then we have an opportunity to move back down into liquidity at around 60,000 and potentially press on up from there. We have an opportunity to move back down into liquidity at around 60,000 and potentially press on up from there. The opportunity I'm looking for still remains a nice big slip in price into liquidity further down, somewhere in the 60K region or below that even. Pay attention, watch this in real time, and position yourself to succeed. And sure enough, that opportunity pretty much played out overnight over the last 12 hours or so. Let's jump into the charts and take a closer look. So as you can see, Bitcoin currently down around 3.4% over the last 24 hours. We came down, we melted through the long liquidations at around $62,000, $62,300. We pushed down almost all the way to 60K, the tip of the wick here on Coinbase at $60,144. So if we look over to the liquidations, as we can see, first of all, the map has shifted once again on the 1 day. Way more shorts in the market now than longs. Just to give you the different timeframes on this, you can see how this has changed over the last month. So we were somewhat balanced on the 30-day. On the 7-day, you can see that's already shifted massively. And then looking back at the 1 day, obviously the same pattern exists because all of those long positions, those remaining leveraged long positions have been liquidated, most of them around $62,000. And that is what precipitated that move back down through that level, down to around about 60K. You can see the sum total of those liquidations over the last 24 hours is around $450 million. That is long liquidations that were stomped out of the market over the last 24 hours. Total liquidations just over $500 million. And if we look back at the fear and greed index, we can see the market is now in fear, sitting at a score of 42, down from a neutral 50 yesterday and mild to moderate greed last week. We saw scores in the range of low 60s, averaged out at 59. So how do we see this happening? Well, just to summarize what we've been watching over the last week, we saw a break of this key psychological level at 65K to the upside. We saw the market get really, really excited about that. Potentially a little bit too excited given that the move wasn't very convincing to the upside. We saw a lot of leverage enter the market to the long side, a lot of people betting on the bounce from that 65K level, a popular setup known as resistance turn support. But as we know, when the market is fickle and they're entering on greed and they're entering with money that they don't have, i.e. with leverage, those positions are really just asking to be liquidated by stronger players in the market who have actual money to trade with, scaring the market and pushing the market down with the liquidity that they have. And what we saw by looking at Bookmap was there was a lot of sell side liquidity sitting up here just above 65K. The peak of which was at around $60,500, which is exactly where the markets turned around and then started moving to the downside. Now we had liquidations, long liquidations lurking just below that 65K level. Those were wiped out. And we also had more long liquidations lurking at former support down here at around 62.3. Those were also wiped out within the last 6 hours. And then we pushed down into the liquidity, bouncing at around $60,000. And again, just as a reminder, nearly $500 million worth of long positions liquidated from the crypto markets as a whole over the last 24 hours. Go and have a look at my Twitter if you haven't already. It's at Tom Butler Crypto, the same as my YouTube. Appreciate the support. So where do we go from here? Well, unfortunately, the macro isn't looking too good in the geopolitical sense. Markets are in fear, as we described already, down at a fear and greed score of 42 out of 100. The situation in the Middle East has escalated. Iran has launched an attack on Israel. That comes with a declaration of war. As we know, geopolitical issues like this are not good for risk assets. As we can see, oil prices have gone higher. The S&P has taken a dive, or at least a slump over the last couple of hours since that news came out, down about 1.5% since yesterday. Interesting tweet from Kevin Senior Iranian official just stated the US was alerted of the Israel attack beforehand. That's likely so the US could tell Israel what to expect and for how long, while Iran gets their show of force for their allies. Of course, it's pretty early to tell exactly how this will escalate. Clearly had some impact on markets. But I think, or at least I hope, this has been on the cards for such a long time now that much of the risk of that hopefully has already been priced in. Only time will tell if that is true or not. So to bring this back to markets and to bring this back to crypto, this is the kind of time when we can get interested again in dollar cost averaging in. As I've said time and again, it generally pays to be buying when the market is in fear, not when the market is in greed, because it means you're going to get a better price. On the shorter term front, I think this bounce has largely played out. I think it's likely we see more downside from here, but we're kind of in wait and see mode for the foreseeable. If we look over at Bookmap quickly and the liquidity in the markets, we can see a fairly decent balance between buys and sells, maybe slightly biased towards the buy side. One thing that we do need to remain aware of is the fact that the leverage in the market is totally flipped now. As we said, there's a lot more shorts in the market now. Shorts are there to be liquidated as well. And as you can see, that totals around $1 billion up at 65,000 again, which is that key level to the upside. In any case, none of that should be considered financial advice, just my opinion. Plenty more to come. Catch you in the next one. Cheers. Bye-bye.